The past couple of years have caused disruption for traditional banks in the same way that every other business sector has been disrupted. But for banks, the major disruptions started a few years before that with FinTech or financial services born in the web invading every area of their business. I called up this executive connection of mine to talk about how banks need to be rethinking how they interact with us as customers and how tech can help.
So, the fintechs, it's amazing to see how much money, and, the brightest of investors are really focused on fintech, very laser focused on fintech right now. And when you look at the largest banks, you mentioned GPMC, I mean, these are market caps that are exponentially greater than all of the fintechs put together. So, it's important to think scale here. But what's going on is each of the different profit centers, each of the different places where banks currently make money are being disrupted, not just in one place.
That's Michelle Baxter, the financial services industry lead globally for Avanade. She and I talk about the current state disruptions, what banks need to do to stay relevant, what core tech can help, and then we throw in some metaverse and blockchain ideas for the future. Let's get into it.
This is Unevenly Distributed, a podcast from Nexavize.com, where we talk to experts to find out what's next in digital technology and where it's real today. Here's your host, Jeff Villemek.
Michelle, welcome to the Unevenly Distributed podcast.
Hey, Jeff, how you doing? Thanks for having me.
Doing well, and thanks for being here. We've done a lot of work in financial services, so it's great to bring you in, and we'll talk about some of the things that we've done, which have been really fun over the past few years in innovation in financial services, which doesn't move as fast as some other industries, but is doing a lot right now. One anecdote I wanted to kick it off with that we can get to at the end, and we'll brainstorm sort of the future at the end, but I went and visited the virtual metaverse implementation of what JP Morgan Chase did earlier this year in one of the metaverse platforms called Decentraland. I visited it earlier this week and I was underwhelmed. So we'll get into that. It's interesting, and it's interesting why they did it. And that's not on JP Morgan Chase, that's on the platforms and sort of where they're at. And there's going to be a ton of investment and work going on. There's a lot of money backing that platform. And then there's Horizon Worlds and Altspace VR and some of the other ones, but I'll let you know what it looked like by the end, and then we can circle back and see if when banks will get real in the metaverse.
Okay.
But I want to kick it off with a little bit more of what's real and what's been transforming banks and impacting banks, not only in the last couple of years, but even before that. So banks started getting disrupted even before COVID, right?
Yes.
So that disruption, I think, is really interesting. Why don't you kick us off by talking about what some of those disrupting factors are and what FinTech is doing to them, and then we can talk about how they should solve it.
Sure. So, the fintechs, it's amazing to see how much money, and, the brightest of investors are really focused on fintech, very laser focused on fintech right now. And when you look at the largest banks, you mentioned GPMC, I mean, these are market caps that are exponentially greater than all of the fintechs put together. So, it's important to think scale here. But what's going on is each of the different profit centers, each of the different places where banks currently make money are being disrupted, not just, in one place. So when you look at the verticals, it's Pride Month. You see all these really phenomenal offerings specifically targeting specific communities, migrants, populations of special interest. You see verticals specifically focused on specific types of lending. If lending is provided for all of my different needs, I don't go to my bank. I'm not using my credit card. So this is what's happening sort of at a macro level. It's just this overwhelming number of new entrants.
It has been amazing. And I think one of the things that is making the banks really concerned is that this is where the future generation of customers is going to end up as well. And the barriers to switching away from a bank today are getting lower and lower and lower. It used to be you'd have a bank and it would be your bank for life. Nowadays, with at a click of a button, being able to transfer your funds to some new place, and maybe that's just an online startup that manages your funds for you and does automatic investing or sets up a mortgage for you. The barriers to switching and the people that are digital natives, millennials and younger in particular, they're now not going to have that lifetime relationship with these traditional banks unless the banks catch up, which I think they can. I think there are
Right.
things that the banks can do to provide those services as well. And because, as you said, the scale that they have, the breadth of services that they have, they can probably do it better if they make the investments. One of the key places that they, of course, need to make investments, and this is a place that you and I have done a lot of work over the
Yep.
years, is data,
Mhm.
is getting the right data together to understand who their customers are, breaking down the silos inside of their organization. And then one other place that we should talk about is open banking, which is breaking down the silos between
Yep.
their data and the data that's outside. So do you want to introduce open banking? And I'll talk about some of my stuff in open banking, where that data has come from, and
Yeah,
what we can
sure.
do with it.
Open banking is most mature in Europe, and that's
Yeah.
where the regulators have driven that need. In the US, it feels more like a marketing exercise, like a growth opportunity, right? To break barriers, to become an ecosystem player, to provide more than just financial services, to provide lifestyle services, to provide advice and counsel when somebody's buying a home, to provide, maybe some recommendations or education around the type of home insurance you'll need. In Europe, this was a requirement. So it's come from a different place, but it's the same technology enabling open banking, whether it's for a regulatory
Yeah.
requirement or for marketing purposes here in North America.
Yeah. That the tech behind the scenes is the open APIs. So
Yeah.
it's being able to grab data, a customer's data that's somewhere else. The customer controls that access. They
That's right.
say, I have an account at Chase, I have an account at Citibank. I'm going to allow Chase to see my Citibank account, or vice versa. Or as you suggested, an insurance company or a real estate company to be able to be part of that ecosystem.
Mhm.
In Europe, this is where it started. Yet back in 2015, with PSD2, that was their regulatory that said banks have to do this.
Yeah.
They have to open up and allow customers to share their data out. So every bank had to open up those APIs. That was an entry point for fintechs, right?
Mhm.
So
Mhm.
what fintechs then said was, hey, here's a whole bunch of data feeds. What we're really good at is grabbing data from a bunch of places and doing interesting things. And if we start by just providing value on top of the data for your financial life wherever it lives,
Mhm.
maybe then we can become the bank in the future. So that was a big problem. The opportunity, as you suggest, I think you're absolutely right. Somebody like Chase being able to use it as a marketing tool to say, hey, we'll help you connect with your insurance company or your real estate company by opening up some APIs and making that data flow. Or, and this is probably what they would prefer, if you would like to see a full view of your financial life and would like to bring in your Citibank account and your Fidelity investment account and see it all in the Chase lifestyle and live inside of the Chase dashboard, that's what they would love. So that's what they're doing. And I'm a Chase Bank customer,
Mhm.
private banking client of
Mhm.
Chase, and I have that option. I can bring in and see my external feeds and all of that data. Are banks far enough along, though, with even breaking down the data silos within themselves to be able to see a complete view of the customer, let alone pull in these outside data feeds to see a more complete view of the customer?
Yeah. No, so you have a barrier between commercial and institutional and retail, right? And you have barriers that are deliberately there, so and to address regulatory requirements. But you also have um, we've grown up with a product centric motivation, right? So the banks have had products and customer data sets related to products, whether they were loans or cards or um, checking, right? So you have like these product groups.
Right.
All the customer data, it's an exercise in itself bringing this together. Some of it is M&A related, and some of it is just that the
Yeah.
products were combined long after the notion of having one user interface existed. Next best action, was the theme for a long time. That's still a term we use to talk about, well, if a customer has this financial need, then potentially they need to do this. Servicing alone, next best action around servicing is a big opportunity for the banks. So this customer receives paper statements. It was a whole initiative just to say initiate when in contact that we offer them electronic statements. Right, that's a big savings. Initiate a smart offer instead of sending millions of direct mail out to find new 1 or 2% gain in credit card usage, that kind of thing. So for the most part, just getting to one customer profile, one view of the customer has been a very, very long journey for legacy banks. These fintechs that are starting up, they're starting with one customer profile and just cross-selling and growing. So it's a completely different place to
Sure.
be coming from a legacy bank and secure
Right.
environment perspective when you just think about the customer profile.
Right. A customer profile and the customer view. Banks, as you suggest, are organized around their products and their silos. And I went through this it's been a few years now, but when I went and got my last mortgage, I went to Chase and I was getting my mortgage from Chase. And I have all my investments and all my personal banking with Chase. And I still talk to the mortgage department and they wanted me to fill out some forms about my net worth. I'm like, it's you. You are it. It's all there. Why don't you know me? And that can
Yeah.
certainly be frustrating from a customer perspective. We talk to a lot of businesses in a lot of industries about changing things around, and they might need to even organizationally reorganize themselves to put the
Right.
customer at the center. Stop thinking about your products and your divisions as your products. Start thinking about your customers and organize around what a customer is to you. And maybe there are different segments of customers and you can serve those and organize in different ways around that. But that human centric design, the customer centric model, it's come and gone, but mostly grown over the last 20 years. And we keep talking about customer centered everything. It still isn't always there in every industry. So this is a good one. Now we have technology that helps, right? And Avanade does a lot of this. You say, hey, banks, you've got all these legacy systems and they're all difficult to get data in and out of. Now, there are new platforms available that are very easy to get data in and out of, like the cloud. So, where are banks at? You go back a decade,
Mhm.
and even when the cloud was getting big, banks were like, no,
Mhm.
no, 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 no. We're never going to do that. Where are they at today in terms of cloud adoption, cloud migration? It's come a long way, I'm sure.
Yes, it's come a long way. So most banks are using cloud more than they would likely admit to, right? So you have all of your applications in the cloud, the specific services that they're taking advantage of that are in the cloud that were sort of the easier transitions, not the core applications, core client data. We're seeing progress, but very, very few banks have actually moved off of their legacy systems, moved off of their mainframes, for example, to the cloud. It's happening. It's happening slowly. COVID was definitely a catalyst, but physical security is very important when you think about
Right.
these SLAs to the business,
Yeah.
and frankly, the propensity of winding up on the front page of the Wall Street Journal if your client
Right.
data, is hacked, and what that means to the brand of these large financial institutions.
Right. I think a lot of what they've done in the past 8 years at Microsoft and all the other cloud providers, Google and
Mhm.
everyone else, has solved that. If you want
Yep.
to take that leap, if you're ready to do it, some of the most
Mhm.
secure platforms in the world, government data, financial data, is running in the
Right.
cloud today. So there's no real reason that a company should be hesitant from that perspective if they make the investment to do all of the right things. There's still a huge amount of work. I mean, to take those legacy applications, to take things that are on the mainframe, it's generational, broad level projects to get that stuff migrated off. So I wouldn't expect necessarily any of that. All of that isn't going to go away anytime soon. One of the things I always love doing, though, and this is how it's becoming a unified view from the customer
Yes,
perspective, it doesn't necessarily have to come
that's
off of
right.
those platforms. We can wrap around those systems. We can keep it there. We can transact back and forth live to those systems through microservices and cloud interfaces and blah, 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 blah. We can put together that layer on top of it. And this is what banks are doing that are doing it
Right.
right, are doing now, and they need to do more of to get that view of the customer and can have the customer
Mhm.
have their own financial life. And then they can start using it internally. Give each of their customer touch points, anyone who talks to a customer, that same unified view. Build those same apps that the customer sees for all of the employees. I think that's brilliant. And and you've done talking about this in terms of you can't have a good
Mhm.
customer experience without a good employee experience.
Yep.
So why don't you talk about that for a second and we'll peel the onion on that a bit.
Sure, absolutely. So in enabling Microsoft solutions with our clients, we are bridging the gap between customer experience and employee experience. And especially if you think about in COVID times, right? Like you had these employees that were completely disrupted, not able to work out of their workspace, their typical workspace, or a retail environment, trying to service customers, and they were, hamstrung in terms of all the
Right.
different apps they were used to working in. We see a need for customer engagement, for live engagement. Digital is table stakes, but live engagement is unparalleled. So at some point, you need to talk to a person, right? And so in COVID, we had this massive wait times, right, to get through to a contact center. So you had this
Yeah.
reckoning with everything has to be digital. But when everything is digital, you lose the ability to have a human connection, to have we call it functionally correct but emotionally devoid, right? So you really got to figure out how to leverage your asset, which is your employees, in engaging customers. So if you take it into a bank, for example, the lowest paid employees, the employees that know the least amount about your financial, the folks that are not certified, are in the branches, right? So at that moment of truth, I'm interfacing with a customer service rep that doesn't have nearly the information that I have on my phone app about my own personal bank or my account. So it's a
Right.
real interesting conundrum. So what you want to do is really empower those employees with all the information about the customer and enable them at that moment of truth to upsell them or to service them or to just, transcend this, whatever the problem is they're having, right? They're in there because they have some kind of financial need, um, to service them and to keep them there and to grow the relationship as opposed to have a negative interaction and say, what, when I have my next choice to make, I'm gonna go with a different bank or I'm gonna go with this startup that my neighbor or my son is using. So it's all about
Right.
empowering the employees through the tools that we're providing. And that's where we've invested heavily in designing experiences for the employee to service the customer.
In the old days, you would walk up into the bank and you would walk up to your banker and they would know you. They would know who you are. They would say, "Oh, hey, Jeff, how's it going?" And they would say, "It's going good." And I'm looking to open up a line of credit and blah, 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 blah. And they would be able to have that conversation. At scale today, with the way branches work and with the way remote services work, that personal knowledge doesn't exist in people's heads and it doesn't have to. So, this is what you're suggesting. And I agree that if you unify all of the data on the back end and you provide that dashboard of what a view of the customer is to the associate at the moment of truth, when they interface with the customer, they can simulate, at least in a really positive way, in a good way, simulate that
Mhm.
experience. Oh, hey, I see you. I know who you are and I see what you've got and I see what you need.
Right.
You started talking at the beginning when you introduced this about a piece of it that I think is really interesting, which is now what happens when we build that application, not only give them a complete picture, but start giving them recommendations on what they should do with the customer next. I wanted to come back to that and
Mhm.
describe that next best action. And I can maybe do a little of the technical aspect on the back end, but I think that's super important and what's really going to make that
Yeah.
interface powerful for the employees.
So we're thinking about it in terms of the intents a customer has with you. So you're there, 90% of the interactions that a bank has with the customer are because the bank did something to them. Like there was some kind of negative event. And so the bank had to reach out or engage or maybe block an account. So we think of it in terms of intents, the reasons a customer has. So there's a ton of research on this. Gartner and others have studies of, what are the top 10, top 20, top 50 reasons why somebody reaches out to their bank. But the goal is to take every negative interaction and turn it into a positive one. So I had a bunch of unusual activity on my account. Well, I might have spent more than I typically spend, but that's not necessarily a fraud alert, which is what would normally happen. There'd be a fraud alert if I have irregular activity because the bank knows more than just my last few interactions. The bank has a better picture of me. So they know, oh, well, actually, she's having a life event. And it could be that the reason she spent a large amount of money at a department store and a large amount of money at a bridal store is because she's getting married. And so what we should do is reach out and say, hey, looks like you have some abnormal activity on your account. Would you like a credit increase? Are these your purchases? And so instead of being negative, be positive. This is the number one thing is trying to make sure every interaction is positive. We can only do that if we think about this from a customer perspective and not from a managing the bank's risk perspective. You can handle every interaction differently than we do today. That's the first thing. The second thing is to immediately think about all the other life events that could be going on, all the other financial opportunities we have to service that customer in this life event. So if you're getting married, it's very likely that you're purchasing a home or you're making additional purchases. And
Right.
so we want to immediately offer education and opportunities related to that. So we think about all the different ways that we can proactively and positively engage that customer and have this all coming through an employee or a bot or some form of engagement vehicle that's human feeling, feels human. So we're not forcing that customer to re-enter data into a wireframe screen or call a customer service rep that doesn't even know anything about them or go into a branch without context. So we're thinking about the life cycle and the different interaction points in a customer-centric view, in an intent level view, and designing experiences so that that interaction with the bank is completely different than it was when it was our parents' branch, if you will.
Right. Now, I don't want people to get confused. This does sound like it's a lot of marketing activity, and there's cross sell and upsell and those kinds of things that do go on as part of it. But it's more about servicing the customer and making them feel like you understand
Absolutely.
them and you know them and you've got services that are going to be valuable to them. So again, they don't just switch off and go somewhere else or pick up the latest app and go do a thing.
Now, Jeff, this used to be considered creepy. I've actually had a CIO tell me that, it's creepy. But if you now fast forward 5 years from when that might have been the case, when you ask for permission, remember your millennial, your typical customer is used to this kind of thing. They're used to Uber knowing their home address. Like, let's think about that for a second. They're used to Uber knowing I went to the train station for my commute for a few years, and Uber saw that as my work address. I thought that was so fascinating, right? So they had come up with, are you going to work? It was flagged as my work address, and I thought, well, that's interesting level of intelligence that the application surmised. My bank should at least, at minimum, think of me in terms of what I was trying to do and to service me more intelligently.
Absolutely. If we go back to that idea of open APIs and bringing in data from external sources, there are a bunch of signals these days that, again, used to be
Yeah,
creepy, but now are
right.
open, and customers expect you to grab these signals and service them better.
That's right.
Banks need to be pulling in those signals. On the tech side is where some of the magic happens, and this is where I've done my work in innovation over the
Mhm.
last couple of years, which is what's actually happening is there's a machine learning model, an AI model, artificial intelligence that's looking at all of those signals,
Mhm.
comparing it to all of the other customers and when they've had their life events and when they've needed a mortgage and when they've needed to start a college fund. And that's how that recommendation engine is starting to get created. That next best action that's powered by artificial intelligence and machine learning, in the same way that when I go to
Mhm.
Amazon and I click on a product and it says you may be interested in blah, 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 that recommendation engine is just how things work. And you expect that and you want that. And sometimes you rely on that. I'll often think of a
Mhm.
product that I need and need to buy some piece of technology, forget exactly which one it was, and just search for something random like it on Amazon and
Mhm.
expect it to work, expect it to know the kind of thing I'm thinking of. When banks can predict not only why you're calling now, and that solves some of the initial point of interaction problems that you described, which was you're calling now because you got a decline or something is happening. The faster we get to a solution for what problem you're dealing with now, the better. If we can go further and now don't predict why you're calling now only, but predict what's going to happen tomorrow or next week or next month or
That's
next
right.
year for you and get ahead of it, wow. Now customers have that reason to look ahead and to look at you as a partner in their life and stay connected. So, hey, I see you're buying a house. You might need some insurance. You might need a home equity loan if you're going to do some improvements.
Mhm.
That's a simple one, but some of the other kind of more complex ones would be like, when does estate planning actually need to start to happen? When does college planning actually need to start
Right.
happening with this particular customer and this particular demographic? How do we get ahead of that and not just be reactive and wait for them to come to
Mhm.
us? Us. I say us like I'm a bank, but I am not a bank. I only play one on TV, apparently. But it's all that predictive data. You started talking through about the face-to-face angle on it
Mhm.
as well. So the customer is going to have an app and the employee is going to have their app. And Hopefully they come closer and closer together in what they see. Then we give them the recommendation engine, and that makes it even better. What is that face-to-face piece of it that can be digitized as well?
So we think a lot about collaboration and this notion of a collaborative forum. So you and I became used to collaborating in video more in the last 2 years than ever before. And the average customer that had maybe used a little bit of FaceTime or used Zoom once or twice really became used to communicating via video. And video really truly simulates the notion of being in person. We've had
I
numerous
feel
video
like you're
calls.
right here, right now. This is
Yes,
amazing.
and this is really an opportunity for in financial services because you can put an expert in front of a customer even more easily than someone who doesn't know them, who won't be able to take advantage of the opportunity with them to serve them. So we think about collaboration tools, both employee to employee and then employee to customer. So if you can have a video conference that's easily picks up on the conversation that a customer is having with your app or with a bot potentially, so that it's seamless and low cost to do so, you're moving into a conversation with an expert, so you can quickly make an appointment just the way we do. So right now what we're seeing our banks do is we're setting up applications right within the application. We're setting up opportunities to make an appointment with an expert. The first generation of this was make an appointment at the branch. Make an appointment at the branch to come in and talk about a loan question. Now it's make an appointment with an expert. We get on a video call right away. We can tap into the expert pool anywhere in the world to converse with me about my specific loan question, my specific type of mortgage at my specific threshold. So all of a sudden, we're able to leverage our employee base. We're leveraging our back office in a way that we've never done before. That is more efficiently servicing our customers. And so we talk about this in the terms of zero back office. You're moving the whole back office forward to servicing customers directly. You're taking advantage of technology we've never had before to do this, and that is using these collaborative tools publicly.
Yeah, that's interesting. Bringing the back office forward and then bringing
Yeah,
them online.
why not?
I've done a lot of work in retail, and one of the big innovation concepts that I did last year and a half ago at the start of COVID was bringing the front line
Yeah,
online in retail. You've got tens of thousands of retail workers at your company that suddenly are at home who would have been in a store making recommendations and answering
yeah,
questions. Bringing that frontline workforce online was a big deal. And there'll be a piece of that for banks too, taking all the tellers and the people in the branches and bringing that frontline
yeah,
online. But the zero back office, that takes it to a whole nother level. And that says you've got all of these experts that are sort of behind the scenes, doing the hard work and doing the underwriting and setting up and figuring out the loans, figuring out investment strategy. And they can be a part of this because we can escalate almost instantly to people or set up appointments to get to any expert anywhere in the world and connect you face to face. So that maybe you start talking with your branch person who is local and in your hometown. But when you need to talk to a lone person, that lone person is in another country or across the planet, that's fine. The technology platforms have come so far, and customers, as you say, are very used to it. We're doing Teams and FaceTime and Zoom calls all the time in our personal lives. The enterprise platforms, which in some way have been a little bit behind in being able to get the same readiness and customer faces and the ease that customers expect, but I think they're really there now. And I've seen some of what you've put together, just as you described, which was that employee interface, building in access to those enterprise
mhm,
systems like Teams, like the whole Teams environment, all of the Teams back end built into a front end and a single app for the employee. So it's not like they're going to go out into Teams and create appointments or open up Outlook. It's all of that in an interface that very quickly says, here's 3 available slots.
yep,
Which would you like? And they click a button and the slot gets created. It's all happening and empowered on the back end by Teams or similar systems.
yeah,
And all of this happens on the other platforms as well. But building it into that unified interface that the employee uses makes that work really well from the customer's perspective. And then bringing in video and even live video, the video feed. So again, they may never open up Teams would be one direction to go. Teams could just be embedded in that employee app. and we could turn on our cameras and talk like this. The other way, and I don't know how many banks you have doing this, and I've had customers
Yeah.
that keep asking about it. Can we just build in our own apps inside of Teams? Do you see a lot of that happening? Do you see a platform like Teams becoming
Mhm.
the app development platform? Or is it the other way? Because I would expect a lot of banks like their systems to be core.
We're seeing it the other way around. Yeah, so we're seeing, the customer has an app and it's the banking portal and it's the customer portal where they're going to have educational content. I usually think of it in terms of the unauthenticated and the authenticated spaces. So you're authenticated, you're logged in, and you can engage right in a conversation. The holy grail is persistent chat. So you have a chat and then you have a video conference, and then we'll have persistent, follow up, if you will, right in a text, right in the app. So you're not asking a customer to download anything or to traverse between applications. They're logged into their bank and they're talking to their bank. Whether it's a person or a bot or the last person they talk to, it doesn't matter. It's all persistent. So that's what I hope we can get as many banks to as possible using this very unique opportunity with the Microsoft technology. And this isn't a plug, but the only platform that can do this service, client data service and collaboration all in one is the Microsoft Financial Cloud, the cloud for financial services, where we can bring all this together.
Yeah, I'm a little biased coming from a Microsoft background, but I kind of believe that of the Microsoft platform.
It's pretty neat. It's pretty neat and it's pretty unique.
It's because they're so strong on the collaboration and have been for decades, and they're so strong on that, and they're also
Mhm.
now strong. They're super strong on the data side, and they're strong in so many areas because it's all just part of Azure and part of their platform, and their collaboration
Mhm.
platforms are all sort of melded together. Yeah, they've got a lot. They've got a lot going on from there. I'll
Mhm.
give them that. All right, so let's move on a little bit. So we've got face to face, we've got chat going on, we've got persistent chat now. Let's get back to, and I'll even describe a little bit more of what I experienced when I got into the metaverse with JP Morgan. I got it into this platform, Decentraland, that's not headset based. It was just on a PC screen. They don't even have virtual reality even set up for it yet. It'll be coming soon in theory. So I'll eventually be able to walk around inside my VR headset and experience that world. I even charged up my VR headset for it and I was all ready to go, but nope, it's just on a screen. But you can navigate around and it's all in 3D on your screen. All of the Decentraland itself, and this is only one of the platforms, then seems one of the least developed of the metaverse platforms, but all the areas you
Mhm.
would go to and visit, like JP Morgan Chase's Onyx Lounge, are little kiosks or buildings or zones that you can navigate to or even walk to and walk between. And there might be a shop next to it that does insurance, for example. So I went to JP Morgan Chase's Onyx Lounge and it was interesting. It was merely interesting at this point. And some of that I don't think necessarily on JPMC. There's a complexity and constraints behind those kind of platforms that make it more difficult. And I think really to do really interesting things. And if you're JPMC, they're constrained by that. They're probably sort of boxed in and limited.
Mhm.
And the platform itself doesn't seem to have very many people on it either doing very much at this point. However, augmented reality and virtual reality and metaverse, if we're having a rich conversation like this, being able to have video, what happens when we overlay live video holograms of us onto avatars that can meet in some virtual space? Things could get interesting in the future.
Yeah.
So what's your view? I mean, why do you think JPMC is doing that now? And where do you think this can go?
So I can't comment on what JPMC is doing specifically because I haven't been involved, but I have a unique bias, and I had a very interesting dialogue with a colleague of mine the other day on this. Having spent a fair amount of time in wealth management, I know how not diverse that space is, and how important it is for us to make financial services and advisory um, more accessible. Right. So I was talking to a colleague who happened to be a white male, my age, and he said to me, I can't see the metaverse ever being relevant. I said to him, that's because all financial advisors look like you. And the reason I sort of had that reaction was because I have seen the use cases that have been propagated by the human resources professionals around metaverse and this whole notion of how an avatar can be anything, right? So you can have avatars that speak any language and can look like anyone. And so you could be serving a community where you don't have the ability to put financial advisors in that community that look and speak like that community. But that's a group that needs financial advisory. Let's take migrants as an example. So if you could make your financial advice available via an avatar, and that avatar could look and feel like anyone, well, you can service a much greater population, and you can do some really interesting things. So I personally saw that as an immediate use case for banks to sort of figure this out. Now, that doesn't mean that you have to be in the metaverse, right? But it certainly means that you could scale and be high touch in a way that look and feel more accessible. I don't know, just a hypothesis, but I thought it was very interesting that my reaction was so different than his. Just knee jerk, and we're both in the same looking at the same use cases, same vantage point, but he happens to be a white male.
That's pretty insightful.
Yeah.
And I think it's not only the person you talk to, but the environment that you're comfortable with and what you're surrounded by. And again, the human centric
Mhm.
experience that you would have that you can have so much more easily customized in a virtual environment
Right.
representation of some kind. I I could skin that to something easily. Either the bank could skin it to a population or the population could pick what they're most comfortable operating in, pick
Yeah.
the language, pick the
Self-select.
environment,
Right.
pick what office the virtual office looks
Yep.
like that you're interacting in, that you
Yep.
feel comfortable with.
And you get the same intelligence, but it feels more accessible. Yep.
That's pretty insightful. I've done work with companies, a lot of work in augmented reality and virtual reality, asking what can we do with it? What's possible? One of the things that virtual reality has been used for effectively in corporate environments is immersing someone into a space that they're not familiar with so that they can experience it from a first person perspective. And one of those
Sure.
scenarios specifically was sensitivity training.
Training.
It's let's put you in front of people with whom which you might have some hidden biases, or the way you speak and the way
Yeah.
they speak might not mesh completely. And you can experience it firsthand. You can try it out. You could try it from both sides of the desk and be immersed in
Mhm.
that environment and learn it then from a training perspective. But then what you're suggesting, which is the real insight, is to flip that around.
Yeah.
Let's change the environment to something that me as the customer is most
Yeah.
comfortable with.
Choose your own environment, right? Choose your own adventure, so to speak.
The language is part of it, something that I didn't even think about before this, too. We can do language translation on the fly. Language can certainly be translated in chat. We do that all the time. And we're getting better and better with doing simulated voice and voice translation on the fly, too. Why can't we take a lone expert that's in Spain and speaks only Spanish and have them talk to someone in France or me in English and but talk through an avatar that includes an interpretation service? That kind of artificial intelligence of
Yeah.
communication is certainly getting better and better, and almost where we could today do a deep fake of the speaker live. In fact, I was talking to Greg Molnar, an education expert at Google, and they're experimenting with this kind of simulation,
Mhm.
doing the live translation where even as I talk,
Yeah.
the words coming out of my mouth are deep faked onto my face and coming out in a different language.
Mhm.
Let's do it. Let's do that. Then you're putting the right brain connected to the right person and taking the environment and the representation and the
Yeah.
language, taking all of those things and making those things infinitely tunable. That's pretty cool. I like that. Couple other things to touch on. I'll throw a couple things at you. Have you seen, let's take blockchain as an example. So we know about cryptocurrency. All banks are going to have to do something with cryptocurrency, just either
Yeah.
enabling storing of it or some crypto transactions of some kind. I think that crypto is one of the
Right.
least interesting uses of blockchain. Blockchain is this big shared digital
Mhm.
ledger, the opportunity to have a big
Mhm.
open ledger out there to trade encrypted information back and forth or to trade transaction back and forth is really powerful. Maybe like real estate
Mhm.
transactions or titles. I talked to a couple banks that were thinking about it a while back. Have you seen any banks experimenting with it recently?
We're talking about so there's a few startups that are doing this. I've seen startups present, none of our clients, although we may have one in the loan space. The idea of bank titles, the idea of identity management on distributed ledger. Your social security card is a physical thing. Your driver's license is a physical thing, but having your identity on a distributed ledger. So I think the security and the identity use cases are the most interesting. I think that's where we'll see the most development, and that's where we plan to invest in some POPs and MVPs to help banks see the opportunity. But I absolutely agree with you. The blockchain and the crypto use cases are so new and so fragmented. And you look at what's happening with the value of the distributed digital currencies, and how different emerging markets are embracing them. From the El Salvador's use of crypto to the banning of it in China. This is just too new, right? But I certainly believe in this notion of distributed ledger impacting and changing as we know it, security, and then things like official documents tracking, such as the titles, the driver's license, etc.
I like the idea of identity in particular. You talked about developing markets and migrant populations and immigrants who
Mhm.
may never have had a bank account before, having a
Yeah,
digital identity, and then being able to onboard it into all of these kinds of services in an
right.
open and very effective way.
Hmm.
And that seems really interesting and really useful. I know there have been some experiments in some refugee situations that have tried to use a blockchain to be able to get identity worked out very quickly,
Oh,
because
sure.
they might have come in with nothing and trying to connect to what their identity is, and using an open
Hmm.
ledger because you have lots of services that they might need to be interacting with has been a really big
Right.
opportunity to get some of that in action and test it out.
Huh.
Banks and crypto. One of the promises of crypto was to disintermediate banks. It was for me
Yep.
to be able to trade a fungible currency with you and to not have to have a bank or a credit card or something else in between. We could
Yep.
do basically wire transfers and not have to have a bank that's in between us. The promise and the reality are very, very far apart. The reality of the fees
Right. Right.
associated, there's something
We're a
called
long way.
gas fees, which is the transaction fee associated with a lot of kinds of crypto, which in theory you think should be zero. I'm just giving
Mhm.
you data and we're going to write a transaction to the ledger and we're going to trade some crypto, right? It's very, very expensive and it's ridiculous. And they're trying to solve that systemically, and we'll see where that goes. I think the real advice for banks, which all of this conversation is sort of centered around, is the services and servicing the human and understanding who they are and what their needs are will keep the banks from being disintermediated, no matter where that store of value, that fungible store of valuable happens to be.
Right.
So that's where they need to get to, and that's where they need to get to quick. All right. Well, this has been fascinating and fun as usual.
Mhm.
And, we've done a lot of work in open banking and a couple other innovation concepts over the past couple of years that have always been really amazing. Hopefully we can stay on top of it and see where it goes. And I don't know, maybe pretty soon we'll both get VR headsets and meet up in another JPMC exhibit in the near future. Anyway, thank you very much, Michelle. I really appreciate getting you on and talking about financial services, and I hope to talk again soon.
Thanks, Jeff. See you soon.
This has been a Nexavise production. For video, links, and to support the show, please visit nexavise.com. That's NEXAVISE.com.